Alright, so we're in a trade here. Took ES longs off of this inversion. Let's go over this trade real quick though. Daily time frame. What do we have? We have a daily buy side imbalance we're currently in right here. And then on the 4-hour time frame, we had a 4-hour. This is where my trade idea stems from. Right here is the 4-hour EBP. So we have a 4-hour EBP formed right here. And I'm going to want to see, let's do this real quick. I'm going to want to see the market respect it. And then on the 15-minute time frame, we have a 15-minute fair value gap along with a 15-minute CRT forming. So I'm going to want to see this stay open. And then on the 1 minute, if we drop to the 1 minute, we had that 1 minute change in the state of delivery with that inversion fair value gap. So that third candle in the next 4 minutes needs to hold above this right here to then continue pushing us up to the upside. And then along with the 15-minute PDRA, even though we might be a little bit inside of the premium taking these longs, it's not bad since we reached equilibrium. And if we do take this L, take the L, respectively, I think this was again a good trade. Since we're closing above here, this is like your last up close candle right here for the down move, and that would be your breaker. So once we get above that, I can see the market reaching these highs. And that's really it. 34 times 2. Let's do the quick math here. What is 34 times 2? It's around 60 something, right? 68. So yeah, 68 to get a 1 to 2. But here I'm just aiming for a little bread and butter. I won't lie. If we go to like the 3 minutes, or like the 2 minutes, is like your little manipulation lag before the move down. So if we use this real quick right here like that, that's like where the objective can be met. And then of course I'm watching SMTs. We don't really have much SMT here, if I'm being truly honest, other than the highs. So like when NQ reaches that high up there, I'm going to pretty much go break even here. So yeah, we're just waiting for that, honestly. But I feel like it's going to be a little bit too close of a break even target here to move the stop loss to break even so soon. So let's clear out the drawings, make it look nice and neat. So yeah, I think order flow is still bullish. I think we can continue to the upside, keep this momentum. I just don't want to see much retracement back to like this range right here. I think the market should leave it open and like disrespect and like start leaving breakaway gaps here, and continue to the upside if we want to be bullish. I'm going to set an alert here for NQ when it reaches this high. Only issue we're going to have here is probably it's probably NQ really, because NQ is reaching in the order flow status is reaching above that high already. But on Dow Jones is also moving higher. I think Dow Jones also could have been a very great trade. Yeah, the only issue here is really NQ is already meeting that high in terms of like volume, and that's probably going to be an issue since like that's maybe this is an absorption of buyers here being collected for the market to move lower. But if buyers want to stay strong and maintain that form, we're gonna have to disrespect that and continue to the upside. As you can see, ES is kind of moving down lower. This is not a good sign of buyers maintaining their form. But slowly, but surely, I feel like with the breaker, I feel like I have a lot more confidence, especially with the 15-minute CRT also. That's another thing. I feel like if this 15-minute CRT actually forms, I think we have a higher likelihood of completing it for the short term, and then eventually then moving down lower. On the 30-minute, we don't really have much right there. On the 1 hour, not really much either. On the 4 hour, that's again EBP right here, beautiful. Even though we have a SIBI there, I think the daily PDRA is always going to be more stronger than that SIBI for sure. So yeah, let's wait and see what happens. I think I'm waiting for the next candle, see what happens on the next candle. Again, just risking 1%, one trade a day. I think this is my one trade for today. I mean, if the 15-minute CRT doesn't hold here, I think we're screwed. I think we're going to go for the 30-minute, but I don't really see that as an option here, especially with how the 30-minute formed. There's not really going to be a fair value up there to tap up into for any of those markets, only for NQ. Of course, we do have SMT at the highs, but we also had SMT at the lows. So maybe the SMT at the lows are the draw on liquidity to push price, or for the SMT at the highs to push price lower for that smaller SMT on the lower time frame. But the SMT is on the lows. Maybe that's the draw on liquidity for us. Again, this is all a learning experience, bro. That's how I view it. I view this as just learning, bro. Like, you learn from these mistakes, from these situations. I feel like if you don't put yourself in these situations, you're not going to grow, especially as a trader, bro. Like, if you don't have more risk, if you don't follow your system, you don't look for certain trades following your system, you're never ever going to be able to improve your system. and define what works, what doesn't work. And that's why journaling is so important, because I'm able to understand like my flaws, you know. Like yesterday, my flaw yesterday was whenever I was journaling it was just simply like relying too much on order flow without the PA, and I was simply pattern trading the order flow, you know. Like the market was clearly bearish. It was indicating bearish prices, but I was still trying to take longs simply because I saw divergence in price and order flow, and that was really it. And the day before that was the SMTs. I was trading the lower time frame SMT. At the highs it was a bearish one, but at the higher time frame it was a bullish SMT, and the market clearly respected the bullish SMT, and the lower time frame one was simply just a draw on liquidity for price to meet and reach above. So yeah, that was really it. NQ is starting to move up higher, so if we do reach that high and this one doesn't, then eventually gonna have to like cut some of the position off. YM is the only one that's really holding us back here, because ES is like in between. NQ is moving up higher, YM is just like pushing lower, and ES is like right in the middle. It's not really moving that much, which is pretty unfortunate, because you would want to see strong displacement off of this breaker right here and just rip price higher with NQ, but we're not getting that. So, and again, sellers probably got absorbed there trying to push price lower. Now the buyers are stepping in. We need to break above that fair value gap there and then continue to the upside. That would be my main confluence here. But NQ is also forming a divergence there with price and order flow. Maybe if YM continues lower and NQ starts to push lower also, we're going to see the stop loss get hit. Or if NQ pushes up higher with the order flow, then and YM starts to come up, then eventually we can probably see price continue to the upside here. Even if we win or if we lose, the result doesn't really matter. More about the process of what we're gaining. That's really it, you know. Let's look at ES. ES is like right in the middle. It's like where's the range here? Where's equilibrium? Equilibrium is right here. So yeah, you want to see the market continue up, break above that high, and then eventually form that fair value gap, retrace up into it, push up higher, continue to the upside. Again, we do have SMT at those highs. Looks like the market is probably, everything's a green candle right now, so I would want to expect the price to continue going higher. But NQ forming that divergence at the high. I think YM should push up, NQ should push up, ES should push up here too. I'm thinking about moving stops since we got that close. Stop loss to break even now. Objective or something like this. We're aiming something like this. Aiming for 1 to 1.57. Let's go look at the order flow. YM is pushing up higher. NQ is strong displacing up there. I think ES should catch up here. Again, SMT at those highs for right now, but we have to wait for the closure of the 5-minute candle on the 15. But again, I want to see ES displace here, give a strong displacement. We are retracing. We also have that 5-minute inversion for value gap form. So again, that's kind of another reason why I don't want to move stop loss to break even so soon, because we can retrace up into here, which is perfectly fine. Honestly, you know, I'm not really against that. We can retrace up into here. So it's another reason why I don't want to trail too hard. Let's mark this one a different color. So yeah, let's just leave it. Leave the runners. See if the market gives us what we want to see. And if not, then I'm going to hit break even, which is perfectly fine for me. I just don't want to trail too tight. That's another important thing. I just want to give my trade breathing room. Unless we start to reverse here, then we probably can't see it. Hit break even here, which again, I'm accepting also. Because we have a 5-minute PD array there. We have a 1-minute inversion. We also have a 1-minute BISC. We also have a high that we broke above. 3 PD arrays there, 3 confluences to continue pushing us up higher. I think the market should not reach my break-even point because it's at a, or if we do reach it, then of course the trade is invalid to me. Because again, we have this 1 minute in unfilled fair value gap, which is damn, I forgot what it's called. This is called a breakaway gap. There we go. We have a 1 minute breakaway gap there, and I don't want to see the market retrace to there, because then eventually we're going to be reaching to the discount. I want to be staying inside of the premium side to continue pushing us up higher inside of this higher time frame premium, and reach for the draws of liquidity. So yeah, that's our first draw on liquidity. First draw, second draw, hard time wise. So we got our third draw, and then fourth draw. Yeah, that's really it. I'll look here. Yeah, that's very my deal. Market is retracing. I think just take everything off your ideal area. Off like a 1.5. I think I'll get this market is moving, so just trying to run. I think I'll get you. For sure. Check under here. It's ideal. It's ideal area of take profit. I don't want to be trying to. Again, high risk reward is good, but for me, I know my risk to reward ratio is not that high. Even though I can probably try, but the win rate's going to decrease, and that's going to mess up my performance. So we are retracing. Probably going to, yeah, we're probably going to hit break even with that strong momentum there. But we are, again, we have a divergence for order flow, so we're probably going to, yeah, I can see this going to hit break even. The market doesn't want to move. Unless YM holds that fair value up and it pushes up higher, then I can see ES doing the same. But NQ is just having strong displacement lower with the SMT at the highs. I know a lot of people would have been like, take profit at the SMT at the highs, but it's not, the risk reward isn't there. So I'm not going to take it. I'd rather just move stop loss to break even. And yeah, we're retracing here. See if we get stopped out. I want to see if I move my stop loss to break even and the market just goes, or if I made a good call of having those 3 PD areas. If we close below that 1 minute PD area there, I see if we start displacing higher. See if our stop loss to break even was a bad call. NQ has that 1 minute bearish PD area there, that 1 minute SIBI. YM also has it all the way to the left there. I'm like glued to the lower time frame here on the 1 minute. Let me get out of it. The 15, everything looks bullish, yeah, on the 15. We can probably continue displacing. Oh yeah, ES is having bullish order flow here. Everything's having bullish order flow. YM2 is strongly displacing up. I think we continue to the upside here. Stop loss to break even was just a facade. But it's so unfortunate how I feel like I always get stopped out like this. Like yesterday was wasn't a stop out. I mean, it wasn't a stop loss break even like this, but after the market just simply displaced lower really heavy. You can see that just after we got stopped out. Right? So we were in the wrong direction, but if we traded the right direction, because again we saw the setup play out also for the bear side, and I did journal it, the market just reached the risk reward there 1 to 2 pretty quickly. I swear it's always liquidations after my trade happens. That's what I'm trying to say. After some form of break even movement or stop loss being hit, some form of liquidation comes in and just either goes in a strong direction. Pretty unfortunate, honestly. $39 here. We had good risk management again, 1% risk, 1 trade a day. It's my 1 trade today. I think it was a really good trade. Yeah, we're still down on the week, 1K. Again, perfectly fine with me. I'm not really anxious. I'm not really mad. I don't really feel much right now, if I'm being truly honest. That's the best way I can describe it. I can't put it into words. I feel very calm. I feel very relaxed. I feel like we're improving for sure. It's really about the system and the preparation that is what makes the trader more successful. That's one thing I'm really trying to work on, is my preparation, like my pre-market game plan. What am I doing pre-market? What am I looking for? What's my bias? Today my bias was bullish. Again, I already showed you guys. Yeah, wait a minute. Boom. TP1 hit. How much would have that been? 10.5. So $52. Really, that's only on 1 contract. We had around like 13. So that's like with all the stop loss, that would have been like 600 here. Well, I mean, all the contracts, but only had 3 there. So let's redo it. So 10.5 times 5 times, oops, 10.5 times 5 equals 52 times 3. It's around 150. And then the rest would have been 14.5 times 5 times 10, around 725. So that would have been around like close to like 900 if we would have had full TP hit. But yeah, not really mad, not really angry. That's another thing. I kind of didn't want to be trying to risk too much, since we have CPI. Like, we have 4 different news events. We have EU, GU, CPI, and then PMI. Like, the market is going to be so volatile tomorrow, and I didn't mean to close that out. But yeah, that's pretty much really it for the trade idea. A little salty, I won't lie, but I mean, it's time to journal it. I think the trade idea was good. Again, let's go over this real quick. Everything was screaming bullish to me. Everything was screaming bullish. Bullish. Everything was screaming bullish here. We had the one day PDA right there, 4 hour time from 4 hour EBP right here. What? Sweep of the low. We didn't have a CRT, but we had the sweep of the low, EBP inside of the 4 hour SIBI, but we also had that daily PDA rate pushing us up higher. So what's stronger? The 4 hour, the daily, because then we also have that daily BISI, 4 hour bullish EBP. The market can retrace and then push up higher. 15-minute time frame. buy set objective met early on before pre-market. Pre-market I could have found a trade, but I didn't want to take a trade pre-market, I mean, truly honest. And then eventually here on the 15-minute, 30-minute, you really can't see much, honestly. If I'm being truly honest, we don't have much. But on the 15-minute time frame, we had a 15-minute buy set imbalance. We also had that 15-minute CRT forming. Just really sloppy movement, I won't lie to you. And then on the 5-minute time frame, we had a 5-minute sell side imbalance, which again was causing a little bit of trouble there. And then we also had a 5-minute BISI form. I didn't see that. Damn, that's kind of why it liquidated me. That's again why it's very important to like scale time frames correctly. And then, but yeah, the 15-minute time frame. Yesterday I had the wrong idea. So like today, imagine if I shorted off of the 5-minute PDRA, because that's what I did yesterday. We had a 5-minute PDRA, but the 15-minute time frame was still telling us bearish, but the 5-minute was telling us bullish. But then eventually the 5-minute got disrespected because the 15-minute got respected. Here I did the opposite. The 15-minute got respected to disrespect the 5-minute, and I didn't even have to wait for the 5-minute because the 1-minute was enough for me. Because again, we had that CRT, we had that manipulation of the lows. I wish we had a better divergence with price and order flow and volume. I think that would have been a way better trade idea here if we had that, but we didn't really have that here. It gave us a little divergence, but it wasn't like really a strong divergence. And order flow was still bullish here again because of I feel like you use VWAP, you can see clearly we're just clearly in an uptrend, and we reach fair value, like the middle point of the bands, and we just displace higher. Now we're like in the upper quadrant of it. Same thing with YM, we're in the lower quadrant, now we're pushing up, we're in the upper quadrant. And then same INQ really just never really met it. But off of that 15-minute PDRA, we had a 1-minute inversion. I entered off of that, and then eventually you can see the market pushed up higher, it came back down, retraced, formed the 15-minute CRT, because again we never went below this low or closed below it. And then the market just continued to the upside, came back down, and then it continued up again. But break even, really sloppy PA here. I think the market, this is a clear market maker buy model. I think the market maker buy model with this last area of distribution should have been meeting the buy side objective, but we also had SMTs at those highs, so I can see why the market never really met it there. So we have a bearish SMT up there. So again, another thing is like yesterday that I realized was I'm not using this chart enough. Like I'm relying on certain indicators, certain factors to give me a bias, but in reality I should be having my own bias before I like look to take a trade. I should be defining my bias by the PDRAs, like the core concepts of my model. Like every other confluence I added was supposed to be for the model to be more high probability. I'm not doing that. I was doing the opposite. I was using the other confluences, not the model, which then led to me losing, taking trades I know I shouldn't have taken. And that's the importance of journaling, because when I reviewed, and I'm going to continue to review, I have to understand that my model is like based around certain concepts, and if I don't have those certain concepts, I shouldn't be using the other ones, because then eventually like it's a 50-50 odds. It doesn't make sense trying to take a trade based off of this indicator when in reality we don't have data collected behind that, when in reality we have data collected behind the model and the confluences we've used before. But then eventually if we implement the other ones and we follow every single thing, it's even more high probability. So it makes no sense trying to trade something else when in reality we have no data behind it. So that's pretty much really it. I'm done yapping here, and I'll catch you guys tomorrow. Peace.